big company lined up, Asian Paints. That's the one which is losing in trade today, as the company's second quarter earnings were below street estimates. The stock is at the low point of trade. In fact, lost about 2.5–3% yesterday as well. Cross margins declined to multi-quarter lows. The volume growth is likely around that 10% mark versus street expectations of 14 to 15%. Amit Syngle, the MD CEO, joins in. Mr. Syngle, 10% volume growth on a 20% sales. That means realizations were very weak this time. You've taken a 20–25% sort of price hike. What explains these weak realizations?
So overall, when we see, I think we saw very strong inflationary trends in Q1, up to almost about 6% inflation in terms of the overall material prices. This was followed by another 2% inflation in Q2 in terms of what we see. As you know, in the paint industry, there's a lag which really happens in terms of the inflation really hitting you to that extent, because there is a inventory of raw materials and finished good which carries into the next quarter literally. So what we saw was an overall impact of at least about 7% happening in Q1 and Q2 on Q2 to that extent. And we have taken price increases of about close to about 2% in Q1 and about another percentage in Q2 to that extent. So a 3% increase against almost like about a 7%, 7.5% inflation in terms of what we see impacted us. So I think that has taken a toll with respect to the overall gross margins. If you see, there is a deficit clearly of about 4.5% in terms of what you see to that extent. And therefore, we feel that that is one factor which has impacted the overall margins to some extent. Obviously, we have spent a sizable amount in terms of our marketing expenses and overall stuff to that extent. But I think the larger impact is of the real inflation which has kind of hit in. I would say that under the circumstances, a 10% volume growth and a 20% sales growth with a PBT and a PAT of about a 23% growth on standalone is a very, very strong performance which comes in, because if you look at from the point of view of even H1, we are sitting at almost about a 37% value growth and about a 24% volume growth overall, which possibly gives us a kick in terms of the market shares which we have gained in the first half of the year.
Okay, all right, Mr. Syngle, that point is taken. So your price hike wasn't sufficient as compared to the inflation, but did you grow faster than the industry?
So our estimate is that definitely we would have on the volume front grown faster than the industry to that extent overall as we see it, because if we see this quarter is largely a stocking quarter in which July and August are stocking months and September is the real retail month which kind of comes into that extent. September has been a little weak because of the extended monsoons which we have been seeing to that extent, and therefore what we see is that what we have been able to achieve in this quarter would be the leading the market for sure.
Right, and how about the third quarter? I mean, we're 20 days into October. How has the performance been? There were, reports of extended monsoon in the first half of October as well. Has that impacted performance?
But I think the good part was that given the fact that there was an impending Diwali and homes have to be painted and so on and so forth, we did see a surge in the last about 15 days for sure in terms of the overall sales which has come in to that extent. But to us, I think overall what matters is that I think the month after Diwali is even sometimes bigger than the Diwali month overall in terms of what we see in terms of the large amount of sales which kind of come in, which is for larger average size painting sites to that extent. So what we see is that October till now has been going well overall in terms of the festive sales which have picked up really. And overall going forward, there are a lot of factors which are working well. First, the wedding season seems to be very, very strong this year in Q3 as well. The construction is picking up. Our B2B business, the projects business has been doing extremely well, outgrowing the retail sales to that extent, and therefore given the kick in the real estate despite the interest rate going up, I think that's a very strong area which is kind of auguring the demand. And lastly, I would say that a good monsoon which has happened, relatively good monsoon, is a very big kickoff on in the consumer sentiment overall in the rural markets. And I think that will definitely give us a higher growth from a rural point of view to that extent, which also has been incidentally the trend in Q2, where the rural markets have done much better than the metro and the T1 to tier cities.
Okay, all right. Mr. Single, I just wanted to loop back with regards to the margin picture. If you could give us an outlook with regards to the margins post the price hike that you've taken. Gross margins are around 35%. You said that a normalized level for you will be around 39 to 40%. So how soon can we get back to those levels?
So if you see Q1, we were at 19.2%, and even overall in terms of the gross margins were closer to about 37, 38% kind of a zone, which were there to that extent. We feel that this is a transitional part happening given the larger impact of inflation which is coming in. The markets are now, raw material is cooling off very strongly. We see definitely a deflation of about at least minimum about 5 to 6% happening in the coming quarter, which we see in all the key raw materials of the paint industry overall to that extent. And given the fact that today, I think the maximum brunt of the inflation we have taken in Q2, and we are done with that kind of an inventory which was there in our system. I see definitely going forward that there will be definitely a push up in terms of the overall gross margins, more towards possibly to a 37, 38 kind of a percentage point, and definitely an improvement in terms of the PBTIT margins going towards the band which we spoke of in Q3. But I see that possibly if the inflation kind of remains flat and the deflationary trend continues, I think by Q4, definitely we will be back in terms of the bands which we have been speaking of definitely.
Right. By Q4, you will be back in the bands that you've been talking about, 18 to 20% EBITDA margins, and 37, 38% sort of gross margins that you're talking about. But let's talk about the big news, the capex that you announced. A lot of that was backward integration to cut costs and be a cost leader. I mean, was that organic, or you did that because competition is heating up now?
So overall, at Asian Paints, see, we have always looked at backward integration as one of the areas. We have been always making our own emulsions, which is the backbone of any paint formulation, which kind of goes into that extent, and also a significant cost of the paint formulation to that extent. We have not kind of suddenly come out with this backward integration. It has taken us about a work of almost about a year and a half in terms of what we have been working on all these innovations which we are thinking in terms of backward integration. So whether it is the vinyl acetate ethylene emulsion in terms of what we are bringing into the R4, or it is a white cement, or it is the nanotechnology which we are boosting up our core business with overall, what we see is these are all strategic decisions from the point of view of not only in terms of improving our cost efficiencies and improving our margins going forward, but also able to offer differentiated standout products in the market. And that is something which is a key endeavor in terms of innovation that we want to take into the market. And we see that some of these backward integrations are also giving us flexibility in terms of imparting some never thought before kind of innovations in terms of product categories at a very, very strong cost advantage, which would kind of really make us really stand out in the market, as we have always been doing to that extent going forward. And given the leader in the market, we will always have pressures from here and there which will keep on coming. But I think so long as our strategy, the brand, the supply chain efficiencies continue, and we kind of concentrate in terms of looking at a sustainable cost advantage, I think we would be possibly ahead of the market. And all these are in that kind of area in terms of what we are looking at.
Okay. Mr. Single, a little more on your diversification, or rather your backward integration. You're not a market leader when it comes to the white putty space. Birlas are, and the Birlas are eyeing the paint space. What is that strategy about? Is this some kind of a tit-for-tat strategy here?
No, I don't think so, because See, today white cement goes into a lot many powder paints which are there, and not only in putty, it goes into textures in terms of construction chemicals, tile adhesives, and a lot many areas to that extent. We don't want to compete really with anyone in a cement space because the larger market there is gray cement. If we have to compete with someone, we would have got into a gray cement space rather than a white cement space, which is a very small market overall as compared to the gray cement market. So to that extent, I think it is very clear that we want to prop up our overall cost advantages. We want to look at innovation in our product categories. And that is why we are seeing that anything which is substantial from a point of view of raw material contributions is something which we want to kind of really explore going forward. And that is something which we will continuously do, because I think the future is definitely saying that can you get a lead from a point of view of cost advantage, which is sustainable in terms of going ahead. And sustainability can only come in with large investments in terms of what you make, where technology is at the forefront and opportunity is something which you are kind of taking.
So short point, Mr. Singhal, what does this mean? I mean, you spoke in the conference call of these integration projects actually improving your gross margins or giving you an advantage of almost 500 to 600 basis points. So what does that mean? Do your gross margins actually go higher from here, or is it just enabling you to maintain margins at current level while increasing volumes? Just wanted to understand the thought process there.
So overall, if you look wherever we would kind of use the this emulsions, overall the white cement, and going forward, I think in all those products we will definitely see a gross margin improvement of about 4 to 5% definitely happening in those products. We will have to see in terms of what those products will kind of contribute to the overall mix of the organization. To that extent, we think that definitely it will give a boost in terms of the overall gross contributions. Very difficult to say at this point of time how much really to that extent, but I'm saying that today we will continuously maintain that band in terms of the 18 to 20% of PBDIT which we have said, and definitely going forward this will help us maintain that cost leverage and advantage in that band as we go forward.